This is the March 19 edition of Commodity Week.
Todd Gleason services are made available to WILL by University of Illinois Extension.
Well, welcome to Commodity Week. I am Todd Gleason. Our panelists for the day include Greg Johnson. He's at TGM. That's Total Grain Marketing right here in Champaign County, Illinois. Seth Vander Weide is here from Logic Ag Marketing. He's in Alton, Iowa. And Sherman Newlin joins us from Risk Management Commodities at Zaner Financial. He's in Hudsonville, Illinois. Commodity Week, of course, is a production of Illinois Public Media. It's public radio for the farming world. Online on demand at WILLAG.org. Our theme music is written, performed, produced, and courtesy of Logan County, Illinois farmer Tim Gleason. Well, Seth Vander Weide, thank you for joining us. This is your first time with us from Logic Ag Marketing out of Alton, Iowa. Generally, we do talk with one of your colleagues, Shane Holtor, from time to time. I would like to know a little bit about you and how you came into the business.
Sure. It's a great question. I guess how I came into the business was I was in public accounting for 20 years in our neck of the woods, heavy in agriculture. I actually had helped a lot of my older clients retire, transition their farm plans to their kids, the next generation, all that. And I kind of left me looking around. My cupboards were pretty empty when it came to agricultural clients, and I love working in the ag world. I developed a kind of a passion for that doing taxes, and I was helping guys through feedlots and cost of production with some of their risk management already on the accounting side, just with figuring out break evens and things like that. So through a mutual friend, Shane Holtorf, for a mutual friend of Shane and me, they were looking to add a new broker in our neck of the woods. And they kind of approached me and asked me if that would be something I'd be willing to do. So took me a little bit I was a shareholder in our accounting practice, so it took me a little bit to exit that position. And I've been at this now for about 3 years, a little over 3 years now. So
I will say that your neck of the woods is an expensive neck of the woods in the far northwestern corner of Iowa. Why is that the case?
yeah, it's well, to be honest with you, it's the case because there are so many different types of feedlots up here. We got a lot of cattle feedlots, a lot of dairies, some bigger hog operations, and every neighborhood has competition for that land, and everyone's farming around that land. So there's enough livestock up here where for the part of their operation, guys are just outbidding each other. You know, you're fighting in the most expensive properties are in the neighborhoods with the largest feedlots usually. So, and that's just how it happens. They just bid each other up. So
It's about the livestock in that case. Let's turn our attention directly to the grains and oil seeds in the commodity markets we normally discuss. Seth, I'll start with you. What's on your list to take up today?
I guess for me, one thing I would talk about between old crop and new crop, kind of the old crop lagging behind new crop soybeans. Another thing would be just the grain markets relative to the oil markets.
Greg Johnson, on your list?
Yeah, not only the high oil prices, what kind of price can we associate with December corn, for example, if oil stays in the $100 to $120 a barrel range, but also if this war lingers on for months instead of weeks, what will the impact be on fertilizer? We already know fertilizer prices have gone up. Fortunately, a lot of farmers in the Midwest have locked in their input, but what impact will that have on those farmers that did not get inputs locked in? Will they pay the higher price, or will they, not plant as much corn? I think that's a good question to talk about.
And finally, Sherman Newlin, your list.
Right. Yeah, I think, we got the March, 31st plantings intentions report coming up. I think that's starting to be on the topic or top of everybody's mind, going along with the what Greg was saying about the fertilizer situation. We're hearing some guys are switching acres, going from, going all beans and no corn. Locally, we're hearing, fertilizer prices were not booked for a lot of guys that typically do. So I think that's going to play into it. I mean, not only that, but you're looking at, again, the Iran war, we have headlines every day. crude oil market was up $3. Now we're down $3 today. So, that has an effect on not only fertilizer prices, but diesel fuel prices that we're looking at for this spring. Have risen considerably since the 1st of January. So, but when you boil it all down, I mean, what do we do about it as producers? I think, we can get into that, looking at some new crop prices here as well.
Okay, so let's do that. We'll remind you that we're here talking on Commodity Week. Our guests today include Greg Johnson. He's at TGM in Champaign County, Illinois. Seth Vander is at Logic Ag Marketing. He's in Alton, Iowa. That's in the northwestern part of the state. And Sherman Newlin joins us from Risk Management Commodities. He's in Hudsonville, Illinois. That's across the river from Terre Haute or thereabouts, close enough. So I do want to ask, Sherman, because you mentioned that some folks were switching acres out of corn entirely to soybeans. Is this regional or a one-off? What do you think?
I don't know. I think it's a little bit everywhere. I mean, and some guys in northern Indiana are doing the same thing because of the prices of fertilizer and nitrogen. So it's not only just around our area, and I'm not saying it's widespread, but I think it is going to be something, that we're going to have to try to contend with as we go on down the road. Because I don't think the plantings. I don't know. We'll see. The report at the end of March. Those were sent out and collected, at the end of February, pretty much, I think. So will they capture some of this possibly late season switch, as well as not only here in the Midwest, but what, might be happening down in the Delta as well? There's, you've got a little bit higher price cotton. There might be a few guys, I talked to some in the South that may plant more cotton acres this year. So the acreage mix is going to be very interesting, but I don't know, after this past year, Todd, can we really believe what's going to happen on the March 31st report? Because it'll probably change later on.
Well, it tends to change later on anyway, but that's because farmers tend to change their acres, I think, from what they thought they were going to do. However, I will say, Greg Johnson, because you and I both studied at the University of Illinois, and they typically would say two things. One, rotation kind of sticks around, particularly in the I states, and that farmers always get it planted no matter what's happening. So we're not at the second point, but I'm wondering what you are thinking about acreage.
Yeah, I think we were going to be 95 million months ago, just because the 98, 99 was an aberration. I mean, if you take the 5-year average, it's 95. Then with the low corn price and the higher inputs, even before the war, I was moving down to 94 million acres. And now with the extremely high prices of fertilizer, I think the farmers in the Mid-South and the Deep South, and probably the farmers in the Dakotas, probably can't justify these higher input costs when they can only grow 185 bushel corn, let's say. Here, and you were correct, I think I agree with you on the I states where we can grow 230 bushel corn, 240 bushel corn. We can probably spread out those higher input costs over more bushels. So I think it's just basically a rotation here in the I states. But I think you could see enough of a shift that I'm kind of wondering if that 94 million acre number doesn't eventually get down to 93. And again, I agree with Sherman. The March 31st report is going to be based on a survey as of March 1, late February, and the inputs have done nothing but gone up since March 1. So that number probably isn't going to be the final number. We'll have to wait for the June 30th number, but I think there's potential for thinking that corn acres are going to be down and bean acres are going to be up. And that probably translates into decisions that farmers will need to make as far as marketing is concerned.
And then finally, Seth Vander, if you're in the northwestern corner of the state of Iowa, how far is North Dakota from you? And I suspect South Dakota is way closer to you.
South Dakota is probably 35 miles. North Dakota is going to be just shy of a 4-hour drive.
Right, so it's a pretty good drive to North Dakota. But South Dakota, when you think about folks in that area, and because you farm in southern Iowa, let's call that closer to the Mid-South, do you see transitions happening in those areas and acreages?
Yeah, that's a great question. And talking to the people that I know in those areas, we have not seen a lot of change from their initial plan off the rotation. Most people had booked their fertilizer ahead of time, and I have heard very little change that's happening for the people that I've talked to in those areas as of right now. There are a few here or there that they're contemplating changing it, but they're having a hard time getting anything priced and getting anything booked at that point. So I probably agree with Greg and Sherman in their in those areas that we don't produce quite as good a corn, and you get out into that South Dakota range. Last year was an anomaly out there, and they did. But Southern Iowa doesn't quite produce as good a corn as it does in our neck of the woods or the rest of the state of Iowa. So I would say that's just real spotty and really dependent on where those farms are at in those areas.
Greg, I would like to ask you about the price of crude oil. What happens if a war in Iran continues for months rather than weeks? And if that price is maintained higher, how does it impact the price of grains and oilseeds?
There's been a pretty strong correlation this time around. It's not always that way, but this time around, there's a pretty strong correlation between crude oil prices and ethanol prices, and hence corn prices. And then with us crushing more soybeans for the oil, there tends to be a pretty good correlation between crude oil and the soybean oil prices. Now, that doesn't translate directly into soybeans, but because there's a lot more meal to be used than oil, but there still is a strong correlation. And so if you really believe that this war is going to continue for months instead of weeks, and if you really believe that crude oil prices could exceed $120, then you're probably in the camp that corn and bean prices are going to go higher as well. So I think it's that simple and it's that difficult. I mean, if we could predict, where the price of crude oil is going to go, then we probably have some pretty good understanding of where corn and bean prices may go as well.
And then, Sherman, this has a direct impact on the price of inputs as well. I think diesel fuel, rather than nitrogen, at least at the moment, will be the primary issue further deeper into the season, because most of the anhydrous will be on before and has already been paid for, probably. And there will be those who have not, and they'll have to deal with it. But how is it that you think about those input prices? Diesel fuel, which I want to say makes up 3%, if I remember right, the cost of production from the farmdoc tables. So it's not a big cost, but it's still $24, $25 an acre. So I'm just thinking about how it is that producers should consider it.
I mean, it is what it is, right? I mean, when it comes to price of diesel, I mean, at the first of the year, I think farm, diesel was in the 260s, maybe for tractors, red dye diesel. Had a call just this week. It was over $4 at one point this week, but had back down to the 390. So you're looking, $1.30, $1.40, $1.50 higher than what we were just a few months ago. I mean, guys will have to just either cut back on maybe tillage, maybe not make that extra pass. I mean, that's a possibility. But for the most part, I think they're just going to contend with it and do what they typically do as far as price of diesel goes. Now, the price of ammonia, I don't know. I mean, it's went up quite a bit. I mean, I bought my ammonia, I think at $835 at the end of the year. It is over $1,000 a ton now. I think it's about $1,025 in some locations. I plugged that into my spreadsheet just to see, how much that was going to cost me more per acre. And if I just left the amount I was going to put on the same, that raised my cost of production over $14 an acre just right there. So, I think that's just going to have to be something guys contend with if they haven't bought their nitrogen. Maybe they don't side dress with, UAN or liquid, because it is astronomically high. It's getting to be about, just shy of $1 per pound for a pound of nitrogen. So, I mean, those are inputs that, that are going to be real. Guys are going to have to think about how they're going to do it. And I think that has pushed some of them, at least in certain areas, to, maybe go more soybeans.
Yeah, so when you think about this, Seth, the numbers, the inputs, and I know that you have done this on the accounting side, you still do it with your clientele today, what do you tell them?
I try to usually base everything off that I work with my clients with is just what are your costs and what do you need on your farm to live? What do you need on your farm to make payments? And we go from there. So what do we talk about in these conversations? making sure we're selling into these rallies and any old crop that we do have left. Um, we had actually, priorly, talked about already locking in some diesel fuel costs. So hopefully we had some of those locked in ahead of time. And a big chunk of my clients, we did have some of that locked in. Um, and then, moving forward, just kind of having these conversations a little bit like Greg was talking about here, just talking to them about um, these prices, new crop prices are moving higher, and we should look at maybe putting some floors in for some new crop as well. Just like to add, I guess, one thing to just kind of just thinking about this bigger picture is, and what I've been talking with my clients about some of these issues right now is just with the higher oil price due to Iran, like Greg was talking about, the Bloomberg Commodity Index is up about 24% year to date when I looked at it yesterday. The subdivision of that, the ag division, is about 5 to 6%. So what I've been having conversations about is, all right, so some of this, the funds are adding positions into these grain markets right now. A lot of that has to do with oil. And it's due to the grain markets are relatively cheap comparison to oil. So I think the speculators and the funds are adding into the grains due to the relatively cheapness comparison to the rest of the commodity index that encapsulates oil, metals, and everything. The ag sector, ag subdivision of that's cheap relative to the whole commodity sector. So, and I think we're seeing some that drive up some of the grain prices. So
Certainly the funds had been piling into the marketplace. They can get spooked really
yes.
quickly too, Greg, like they did on Monday. A couple of things happening there. One of them was the president saying, hey, I may not meet with President Xi right away. We might have to hold that off for a month or so because of the Iran war. That spooked them, among other things, and that caused a big drop in the marketplace. The funds do play, though, Greg, in this marketplace. How do you see them moving into the markets going forward?
Yeah, I think they're looking at the same headlines that farmers are looking at, and they're placing their bets accordingly. The thing to keep in mind is the funds probably are the second longest that they've ever been, ever. Maybe third, but I think it might be the second longest that they've ever been. And that's fine. That's not to say they can't buy even more. If oil prices go above 120, for example, they'll probably add to their long position. But Monday was a perfect reminder that no matter how fast it goes up, it seems like it can go down even faster. And, it's almost impossible to try to pick the high of the market. So I try to encourage farmers to lock in profits. The February crop insurance average on beans was 1109. We're in that 1150 range right now. So we're above the crop insurance average on both corn and soybeans. And I just think there's a lot more potential downside than upside on soybeans. We know Brazil planted a big crop and they're 2/3 harvested. We know we're going to plant more beans. The uncertainty about China on the demand side, I think that's the biggest question when it comes to soybeans is what kind of a demand number do you plug in for soybeans? With corn, I think you can plug in 16 billion bushels pretty easily. I don't think it's going to vary much from that. The uncertainty on the corn is the supply side. How many acres are we going to plant? Are farmers going to cut back on inputs? We haven't even talked about the weather yet. So on corn, the uncertainty comes on the supply side, but on soybeans, the uncertainty comes on the demand side. And unless you've got a hotline to President Xi, I guess I don't think anybody knows whether China's going to buy, those extra bushels or not, or, how that's all going to play out. So since we don't know, I think we go back to locking in profits. And if you can lock in a profit on soybeans, when I think there's more downside than upside, that's probably a good thing to do. I'm not ready to say that on corn yet. I think there's enough uncertainties in corn that, we want to get some bushels sold, but I'm not willing to say get it all sold or get a big chunk of it sold because, there's just so many uncertainties on that supply side that I think the price will hang in there for a little bit longer than it will for soybeans.
Then turn your attention, Sherman, to that prospective plantings report that's due out March 31st. I think that's a Tuesday. Not next Tuesday, but the following one. We've heard some numbers. What are you using?
Well, we officially haven't come out with our numbers yet. We're working on them right now, but I think the 94 corn, 4 or 5 million lower on corn, maybe 4.5 million higher on soybeans is kind of where we're going to be looking at to start with, the way things are looking. Um, but you're talking about the funds a second ago, Todd. I mean, they added a lot of corn length last week when the COT number came out, so that was pretty shocking. And the market didn't move that much. But I think now you're looking at a market with the higher energy prices. You're looking at inflation. I think you're seeing some money flow come out of the equity markets and the metals markets. We've had a big run up in these metals. Now they're really having a big sell off. But I think funds are looking at corn and soybeans and ag commodities in general right now as a place to put some money. And the commitment of traders reports are kind of reflecting that as well. So I do think we have some more upside in these markets. But time will tell. I kind of agree with Greg on the soybean side of things. No guarantee on how many more beans China will buy, if any, but they could come in and buy some corn. And I think the trade's starting to maybe sniff that out as well, because that's kind of what they said out of the meetings coming out of Paris last week, that they could buy some other ag commodities. So we're looking at thinking maybe they could add to their corn, buy some corn, maybe not buy near as many beans, but we don't think maybe they're quite done buying things. But so we, think we have some more upside. But I, agree. I think, you got to start taking a look at some of these new crop soybeans up here and take a look at making some sort of sales one way or the other, where it's cash or using some put spreads or something.
I would like Seth to talk a little bit about a different commodity, wheat in particular, how you view that commodity, the problems that are happening in Nebraska, Kansas, Oklahoma, what that might mean for the wheat market in the United States, then, of course, the fundamentals globally and how that might cap, if it does. I don't know whether you think that's the case or not, any particular movements in both the feed grains, wheat and corn.
Wheat's been on a real tear here lately. A lot of that has to do with the weather. We're coming from a deep freeze. It's been real dry. Now it's going to get real hot. Don't really know what the status of this winter wheat's going to be. Plus, then you get a lot of the global pressure from war with, and it's not it's a hard one to judge what it's going to do from here, in my opinion. But it does feel like it has it's been really resilient, and but I think a lot of it is more weather driven right now in the short term, pairing that with what's going on globally as well.
Greg Johnson, I will turn to you because you do have a lot of experience within the wheat market, soft red in particular. And this is different this time around than, for instance, when Russia first invaded Ukraine and we had a huge spike up led by wheat, because Russia and Ukraine are the place from the Black Sea area that production happens. We are in the Middle East this time around, and there is very little production that takes place there. A lot of usage that supply coming in. What difference does that make this time around for how you view the impact of war?
You hit it right on the head. There's not a lot of wheat grown in the Middle East, so wars and supply chain disruptions don't affect the price of wheat near as much. I mean, it's a food commodity, and we're not affecting the supply side of that equation. Maybe we're affecting the demand side as people want to get a little bit, some of those countries want to get a little bit stored up just in case. But you have to remember, we've rallied almost $1. Wheat is $6.20 on the board, and that's getting pretty close for farmers to be able to get $6 cash for their wheat. And I think a lot of farmers are going to take advantage of $6 cash wheat if they get the opportunity.
I want to switch topics to next Friday, March the 27th event in Washington, D.C. The president has invited farmers and farm organizations there to celebrate 250 years of the United States. There is some expectation that there may or may not be, I suppose, policy announcements. It would seem unlikely, I think, Sherman, that there would be an E-15 policy announcement, because that's in the hands of a congressional committee. But there's a lot of thought there could be an RVO policy announcement. That would seem to be a soybean thing this time around rather than a corn thing, but you tell me about that. It's mostly about renewable diesel because ethanol itself it's going to be 10% of whatever we use plus whatever exports. But the RVO for the other products, particularly the biomass-based products like soybean diesel, renewable diesel, could be there. Do you think an announcement will come?
I don't know. I mean, the trade sure thinks that it is at certain times. I'm afraid if there is an announcement, it's not going to be what the trade's hoping for because we've seemed like we've been disappointed on these so-called announcements that we're supposed to be expecting to come, and it's not what we were hoping for. And if it is, it's probably something we already have talked about. And the biggest thing on the RVO will be what will they make the refiners continue to use, take and blend the blending part of it from 50% to 75% rate, I think is kind of what's hopeful. I don't know. I honestly, I'll be shocked if we see something market bullish that's bullish from this announcement next Friday, honestly. And like you said, some are thinking, we talked about it today at our meeting, but some are thinking, there could be something, an announcement about E15, but again, I don't expect that. That would, be helpful for the corn market if it did, but that just seems to be a very big hurdle that Congress and EPA just can't get over.
Let's turn our attention to your final thoughts for the day. I think Greg Johnson from TGM, I'll start with you. What's your final thought?
Well, there's so much uncertainty in this marketplace. So I caution farmers not to get caught up in the day-to-day. Corn's up 10 cents today. Beans are down 20 cents tomorrow. We have to focus on the big picture. And if we can make money, we need to lock in some prices. One thing to keep in mind, Allendale did a survey this week, and they said that 70% of the farmers have got their old crop corn sold, or they got 70% of their old crop corn sold, and 90% of the beans. But on new crop, farmers are only 9% sold on new crop corn and only 11% sold on new crop beans. Now, that doesn't mean it can't go higher, but that does mean that there's a lot of bushels that farmers will sell into this market on any continued rally. So kind of keep that in the back of your mind that there's still a lot of selling that can happen. The funds are already long a big chunk of beans, long a little bit of corn, but longer percentage-wise on beans. So there's a lot of bullish news, good news already factored in. Still a lot of unknowns on the corn. I think that supports the corn price, but this might be an opportunity to get some soybean sales put on the books.
Sherman, Newlin, your final word?
Yeah, I mean, I agree. I mean, a lot of farmers have sold quite a bit of crop, but there's, some still out there to be sold. I do think you need to use these, rallies to be selling, especially some old crop as we go up. Now, we have been long, corn calls for quite some time for guys for reownership, and I think that's still warranted. But, when you look at the COT report from last week, they went long corn 198,000 contracts. I mean, I think the record was over 400 at one point in time. So there's still room for them to continue to buy corn if they want. But I mean, you're looking at new crop corn at 494 and it's over $5 for March 27. I think those need you, to be taken a look at to do a little bit if you haven't done anything. And hopefully it's your worst sale and the market goes up. But but on beans, I'm a little bit more. I want to get a little bit more done on the bean side, especially as we get into March, because we could see that jump in acreage as well. So I'd like to be sold at least by 30% or more before we get to the field on soybeans.
And finally, Seth, Vander, Weide, your final thought for the day.
Yeah, kind of echoing what these guys, what Sherman and Greg have already said, risk does happen fast, and you kind of have to be prepared for it. So having your break evens, knowing your cost of production ahead of time to make wise decisions. And I tend to agree with their assessment. Just When it comes to soybeans, we've broke through the initial range that we were last week's high. We're running up to that range, so we're at an elevated level right now, and you got to reward these markets when we have these positive moves up in these markets. Same thing goes for corn. I think we closed today as 4 or 5 cents off last week's high, so we've retraced kind of our move from Monday. We're on these positive levels. If you're profitable, don't be afraid to make sales.
Commodity Week, of course, is a production of Illinois Public Media. You may find and listen to the whole of the program anytime you'd like. You can do that at willag.org. Our thanks go to our panelists this week, including Seth Vander. He's at Logic Ag Marketing out of Alton, Iowa. Sherman Newlin is here from Risk Management Commodities in Hudsonville, Illinois. And we're joined by Greg Johnson as well from TGM, that's Total Grain Marketing in Champaign, Illinois. I'm U of I Extension's Todd Gleason.